Amar, thank you so much for taking the time out and joining us. Amar, it was a lackluster day coming in, after the big uptick in the market that we saw coming in on the back of that exuberance of a ceasefire. We have now started consolidating. So what are the levels to watch out for?
Yeah, I would say that we did witness a very sharp rally 2 days back, and the last couple of days we've seen some sort of consolidation. So I think that's fairly well expected because the sort of rally that we witnessed was phenomenal. And if I look at the benchmark index, first I'll talk about Nifty. So Nifty continues to remain positive. There's no doubt about it. If you look at the derivatives data, there we are seeing more of short covering. Like for today, it's more of short covering which has happened because a lot of shorts, they got squeezed. So no one expected this sort of rally in Nifty and a sudden end to this war between India and Pakistan, I think. But that's been a positive. And also one positive which I see is that, as you were also saying earlier, is that we are seeing across the board, across sectors and across multi-cap, so be it large cap, small cap, mid cap, we are seeing some positive momentum building up. So that's a fair, I would say, a significant development. As far as the levels for Nifty is concerned, I would say on the upside, Nifty seems to be capped around the 24,750, 800, 850. So you can say that's a range on the upside, 24,750 to 850. That's a immediate zone of resistance. Whereas on the downside, Nifty is very strongly supported around the 24,000. 350, 450 zone. So that's a very strong support zone for Nifty. So any pullback is an opportunity to buy, but higher levels will be sold into. That's what is being clearly indicated. On talking about Bank Nifty, see, Bank Nifty had a spectacular rally, no doubt about it. But for the last few trading sessions, we are seeing on the daily charts, there's clearly lack of momentum. So what it effectively means is that Bank Nifty would continue to witness some choppy trading sessions, and till the time we don't see it breaching above the 55,400, 55,500 zone, it would trade in a consolidation. On the downside, Bank Nifty is very strongly supported on the 53,000, I would say 53,900, 54,000 level. So that's a range for Bank Nifty, and Bank Nifty technically is very strong on the intermediate term trend. So one shouldn't expect it to correct significantly. So any pullback is again a buying opportunity in Bank Nifty as well.
Hi, Mr. Singh. This is Kanishka also joining in. Now that you've said, you see strong support zone for Nifty and the market has also ended on a positive note today. What are some of your picks at this point in time? How does it look on the charts?
Yeah, so the first stock to look at is National Aluminium, that is NALCO. So we are seeing some positive momentum in the metal space as well, and NALCO had corrected significantly from almost 260 levels to as low as 140. Currently, it's around 173. So we've seen some strong up move today, and also there was a lot of consolidation which was happening in the stock because earlier the stock was unable to breach the 160, 165, 168 zone. So it has taken that level. So this is one stock one can look at a buying opportunity around the current levels, with a stop loss of 161 and a target of 195. The second is from the banking space, and that is IDBI Bank. So in IDBI, what we've seen is that the stock has been consolidating anywhere between 75 and 85 on the upside. Technically, it's quite strong on the intermediate term trend. Long-term trend, I would say, is positive. And short-term trend has shown some bullish momentum. And also what we are seeing is that volumes have increased significantly over the past few trading sessions compared to the average volumes of the last 10-15 trading sessions. So at the current level, IDBI Bank is a buy with a stop loss of 77 and a target of 97 on the upside.
So IDBI and National Aluminium are the two picks that you have given to us. But thank you so much for taking the time out, Amar, and joining us today. We'll let you go on that note. But time for word from the wise. We had Nilesh